Today marks the 6-month anniversary of the largest tax code overhaul in 30 years. It was 6 months ago that the president signed this bill into law. Hundreds of companies have announced plans to pass on the savings to American workers ever since. Joining me right now to talk more about that is Kevin Hassett, White House Council of Economic Advisors Chairman. Kevin, it's good to see you this morning. Thanks so much for joining us.
Oh, it's great to be here, Maria.
And of course, it's been 6 months. Jobs are coming back to the U.S.
Sure.
Consumer confidence is up. Unemployment hitting a record low of 3.8%. Speaker Ryan said that it is a game changer. How long does this game changer last? Tell us about the runway that you expect this tax package to have.
Right. And by the way, I was thinking about it, Maria. I think it's been almost exactly 20 years since you and I were first on TV together. And we've been talking about tax reform almost the whole time.
You're
right. And how many times have you interviewed me when I was at AEI and I said, hey, if we cut the corporate rate, we'd get a big explosion in capital spending and that'd be great for the economy. Well, that's what happened. You know, our models said that investment spending would go up about 9% because of the tax reform. Did you notice what it went up in the first quarter? 9%.
Wow.
And so we've got a capital spending boom going on right now that's going to continue for really, we think, 3 to 5 years, and it's going to lift wages and output and give us 3% GDP growth, just like President Trump promised.
So 3% GDP growth you're expecting for a couple of years. There is a narrative.
More than that. Yeah,
more than that. Because there is a narrative out there right now, Kevin, that, you know, things are going to slow down in 2020 when you consider the fact that interest rates are going higher, demographics, for whatever reason, we're in 10 years of this recovery. You're not seeing it because there's even conversation about a recession possibly happening in 2020,
right. I
beyond.
see people saying that, but I just don't agree with it. And again, don't forget that this is a fundamental game changer that, you know, sadly, you and I have been talking about for 20 years. It took that long to get it done, but President Trump got it done. And it's going to take a while for all the positive effects of that to come back. But if you looked at some data that was kind of esoteric data that came out this week, did you notice that U.S. foreign direct investment by U.S. multinationals, so this is like moving jobs overseas, declined in the first quarter by more than $400 billion. And at the same time, U.S. firms brought home to create jobs here in the U.S. more than $300 billion. Both of those numbers were way the biggest since World War II. So that's the kind of stuff that is going to be a fundamental game changer, and it's going to take a while for all the positive effects of that to be felt. So
a Gallup poll out earlier this week found that satisfaction with the direction of the country has reached a 12-year high. On Wednesday, President Trump set the record straight that this is his economy. Listen to what he said.
Yes.
Because I hear a couple of the fakers the other day said, well, I think it's Obama's economy. Obama's economy. Obama. They want to put on more regulations. They want to take back your tax cuts, which are massive. They want to take them back, and they want to raise the hell out of your taxes, and the whole thing will go boom.
He loves riling up the crowds. It's great. So satisfaction rate hitting a 12-year high. Kevin, what about that? If we were to see a change in November, how likely is it that Nancy Pelosi leads a revolution in terms of changing this and taking back these tax cuts?
Right. If I were Nancy Pelosi and the Democrats, I'd be really, really nervous about the fact that the economy is doing precisely what President Trump and his team have been saying it would do, which is growing at 3%. Remember, they said it was impossible, that we were stuck at 1.5%. In 2016, President Obama's last year, the big regulations and the high taxes were so terrible that capital spending contributed negatively to GDP growth that year. And so now we've got a boom that they said was impossible happening. And so one of the things I saw in that Gallup poll that your staff was kind enough to email to me was that the satisfaction with the economy is like 65%, right? And so the satisfaction with the economy is about as good as I've ever seen, maybe going back to maybe the first time I was on your show in the late 90s. You remember how big the dot-com boom was. And so anyway, so satisfaction with the economy is enormous. There's still, I think, a lot of political tension because we're so divided as a nation. But as people just look at the economy, they're going to recognize that President Trump's policies are delivering. And I think that then even the partisan Democrats who really, really have a big problem with the president are going to wonder, you know, maybe I was supporting the wrong party.
So how should we look at then the tariffs? Because there's a feeling that the tariffs obviously are a tax, and that's going to impact the economic growth that we've seen as a result of the tax reform package. Are you worried that things are going to start getting expensive because of the president's policies on trade and tariffs, and perhaps that cuts into growth?
Well, I think that the president is a disruptor, right? He disrupts terrible policies. And one of the terrible policies for American workers is that other countries have much higher tariff barriers and tariffs non-tariff barriers and tariffs on our stuff than we have on their stuff, and he wants it to be symmetric. And if he accomplishes that, that's a huge positive for the U.S. economy. And I think that we're already seeing that that's kind of must be what firms are thinking. If foreign direct investment is dropping so much and capital spending and new job creation in the U.S. is so high, then it must be that people are looking forward to a positive equilibrium as we are.
Well, I mean, look, the EU's retaliatory tariffs on the U.S. go into effect today, Kevin, and we're talking about goods like motorcycles, peanut butter, bourbon, cranberries, orange juice, to name a few of those products that will be taxed. Is it fair to say those products will likely see increases in prices?
Yeah, I think it's fair to say that those industries will suffer because of the European tariffs. And then think about that thought, right? So the Europeans have a 10% tariff on our automobiles, which is in place before President Trump did anything. And those 10% tariffs are very harmful to American workers. And President Trump's position is just enough. You heard at the G7, he said, let's just all go to zero. He wants a better world with more free trade that's symmetric, and he wants to stop allowing other countries to disadvantage the U.S.
All right, well, we'll be watching this. Congrats on the passage of tax reform 6 months later.
Maria.
Good impact there. Kevin Hassett, good to see you, sir.
Bye-bye.
Thanks so much.